What's up, Mortgage Coach community? I am coming to you live with David Childers with Keeping Current Matters. And we're going to have a conversation with you right now about the number one thing on the minds of every real estate agent in America. This is one of the biggest topics that you could build your next meeting with real estate agents. And by the way, guys, this is on the topic of every potential listing, every potential buyer. Like, what is the one thing according to Dave Childers and Keeping Current Matters? And then he's going to provide some slides, some insights, some content so that you guys can crush it at your next realtor conversation, your next realtor one-to-many presentation, and even on social media. Remember, guys, we should be creating social media that is helping real estate agents solve problems in today's market. So, Mr. Childers, what is that one thing?
You know, I think that right now, the biggest issue is how are rising interest rates going to affect the real estate market? Every agent's thinking about it. You mentioned every buyer and seller is thinking about it, and it's sort of consuming agents' mind space right now. And here's a great thing, Dave. I think we can bring them the answer to that. We can show them historically what's happened, and we can bring our expertise to an office meeting, to a one-on-one meeting, a team meeting, whatever that is. For them and build a relationship and start to do that based upon facts and based upon our expert advice.
Let's go. Let's help us out. We've got an audience of mortgage coaches, which are the single highest quality, most valuable mortgage professional to a consumer and to a realtor. Walk us through your thoughts and give us some slides so that we can make our next meetings better.
Yep. So I'm going to do this. A couple of things. I'm going to share some slides here in a second, Dave. I'm going to give these to you. You can show people where they can download those. But here's the governing thought that I want to remind you of in a time like we are in right now. It's in times of uncertainty, people follow the certain. Dave, you've heard me say that before. So as we're more certain about what's happening in the market, more people are following us and following our advice and following our expert, kind of opinion of the business. So I'm going to share my screen. I'm going to give you these slides, but first one, it's all about interest rates. Freddie Mac just came out and said mortgage rates have increased for the 7th consecutive week. I'm not here to say exactly what it is because many of you will say, well, it's higher than that. This is a rear view looking, sort of picture from Freddie Mac on their weekly monitor, 5.1%. But we know rates have gone up ever since the first of the year. If you want a simple and effective visual to show what has happened in the interest rate environment, this is it right here. We wrapped up, the end of the year right at 3%. The average rate for 2022 was 3.22%. I think on the last year of the month, we were at 3.1%, and we find ourselves today over 5% on the average 30-year fixed, meaning it's costing more, we know, for folks that are going out and buying homes. It's causing agents and many people to go, gosh, what is this going to mean? Is the market going to crash? And Dave, we can come back next week or in the next couple of weeks and talk about that and give you all the facts there, because there are a lot of questions in today's market that I think we can answer. So let me show you how to break this down in a meeting or maybe over a Zoom like we're doing right here with an agent so that you can bring to them the advice they need. I'll start here with Len Kiefer. He said, mortgage rates are likely to continue to move higher throughout the balance of 2022, although the pace of rate increases is likely to moderate. First big point, we should expect rates to continue to rise, although at a moderate pace, not at the pace that we've seen in the first few months of this year. Goes on to say much of the increase in rates in early 2022 is anticipation of what will happen later this year, especially with the Fed's policy. So many people, Dave, one reason I love doing these with you is the audience of loan officers that are mortgage coach loan officers are the best in the business and have an expert opinion and can explain that just as well, if not better, here than Len Kiefer from Freddie Mac. But what we need to be coaching our agents on is, hey, we've seen this quick rise. Here are the reasons we've seen that, and what do we expect to happen for the remainder of the year? And here's the reason. I'll guarantee you that's what's on their mind. They're wondering, does that mean I'm not going to sell as many homes? Does that mean homes are going to lose value? How do I then, as an agent, give expert advice to the clients I serve. That's the number one thing on their mind. So I want to pause for a second there, Dave, but I think that positions what we want to talk about. And I'm going to get into home prices and the number of homes sold and things like that in just a minute.
Yeah, so guys, we will get these slides. They will be in the file section of our Facebook group. So go into those file sections. I'll have them labeled. It is April 2022, and I'll have those labeled as keeping current matter update on this date. And then remember, guys, you got to show the facts, the data. I love that slide because it's just, this is the facts. This is what has happened. And now we're providing some narrative, some commentary. This is opinion, but it's qualified opinion. So,
Totally.
so keep it rolling. And if you guys have questions and you're watching this live, put the questions and comments, and I'll bring them into the conversation.
Yeah. Dave, I want to respond to what you just said. I'm going to bring the facts here. I'm going to give a shout out to Jim McMahon, who you and I know and love well. He always told me, do you have a relevant market opinion based upon fact? So what I'm going to give you over the next few minutes are the facts that you can then base your relevant market opinion upon. Okay. So I'm going to tell you a few things. I'm going to show you what's happened in history, and then you can bring that opinion to the agents, to the really any referral partner or any client of yours that you're serving. So let's talk about prices first. What's going to happen with prices? Well, if you go back in time all the way to the early 90s, in interest rate environments where rates have risen more than 1%, every single time, Dave, prices have risen. Now, when you tell somebody this, they're like, hold on, what? My conventional wisdom tells me that when rates start to go up, not as many people can buy homes. And that means that we're going to see prices rise and we're going to have, issues in the housing market. Well, if you go back and you look at the facts all the way back to the early 90s, prices have risen every time we've seen a rate increase greater than 1%. Why is that? Here's a reason. Rising rate environments take people on the fence and they send them one of two ways. The first group says, I'm getting out and we're not going to do it because it's become too expensive. The other group says, we're getting in now before it gets more expensive. So it's a motivator of people, and we certainly see that in the housing market. So when you start to look back, again, all the way back to the early 90s, every chance or every time we've been in a situation like this, we've seen on average home prices appreciate by 8%. So we can give our expert advice to the agents we serve on home price appreciation based on what we've seen in the rearview mirror. And you can say, hey, here's what's happened historically. Here's what I believe that's going to happen this year. Okay.
And guys, here's a speaker note. If you're presenting to a group of realtors or having a conversation, I don't know if I would do it right after the slide, but it might be right literally after the slide. I would show a total cost or a cost of waiting analysis. So yeah, based off the local market that you serve, so have a purchase price that everyone in the room is going to relate to, and have, based on your interest rates. And then if you're giving this to a one-on-one to an agent, you're like, hey, what do you think is going to happen with rates? Oh, you think they're going to go to blank? Or that there's a risk that they'll go to 5.5. Oh, and what do you think is going to happen to values? Oh, you think they're likely to be 3% or 5%? And then, show what that looks like by today. Wait 6 months. What's that cost? Wait a year. What's that cost? So make sure you're doing a cost of waiting analysis for either the consumer, the realtor, or the audience, either right after this slide or coming up soon.
Yeah, that's great point, because I'm going to get into that in just a second. I'll give you a little bit of fact on that as well. So first of all, let's recap real quick. Rising rate environment going back to the 90s, every time home prices have appreciated on average by about 8%. Now, what happens to the number of homes sold? Second question we're asking. Again, what's going to happen to my business? We want to kind of take that sort of lens for the agent that we're talking to. This is the same look going all the way back to the early 90s when rates have risen more than 1%. What has happened to the number of homes that we've sold in this country? And you sort of can see there down, up, where we've been. I want to break this slide down if we start to look at home sales. Okay, and I'm gonna sort of mark it up here for you. Again, I'm going to give you these slides. You can present it the way that you want to present it. But here's how I would start to break it down. I want to look at this visual, and I want to start to say, okay, what was going on during the times? In the first note I want to make is in 93 and 94, we saw a little over 2% rate increase, 2.38%, but the final rate where we ended up back then was 9.2%, almost 10%. Let me be clear right now. No one is calling for 10% on the average 30-year fixed this year. I don't see any experts calling for that. So we can sort of say that was a different situation, okay? The second one that I want to call out here is 05 and 06. We know something else was at play during that time. 05 being sort of the height of the frenzy in the housing market before the drop down in the crisis and the Great Recession. So again, we saw home sales drop by 14%, something else at play there. First time there in the early 90s, rates went up to almost 10%. Second time here, we were impending going into the housing crisis. So if I take the two of those sort of off the table and say those were different scenarios than today, what I'm left with is a negligible impact in home sales historically. Okay, several years we saw home sales drop by 2%. One year we saw home sales rise by 2%. I'm going to call that negligible. Again, you can use that to form your own relevant market opinion to say what's going to happen with the number of home sales. Oh, by the way, what's dominating headlines right now? Existing home sales are down. And I'm not going to go deep into that, but I will tell you this. Existing home sales are down right now because we don't have the number of homes to sell people that want them, not because of demand. So when you start to process this, you say, what's going to happen with prices? We can answer this. What's happened with the number of homes sold historically? We can answer this, positioning you as the expert in this situation. So I want to pause for a second, Dave, before I hop into what I think experts are saying about the rest of the year.
No, I love this. And I just love that phrase, form your own relevant market opinion based on data. And then remember, guys, you're just helping people make sense of the data. So the more I would just say, as you're going into this, you're not trying to sell anybody on an opinion. You're coming in with this, humble, curious, let's review these numbers together, and then let's form our own opinion. I think the more successful you'll have at leading and influencing whoever you're talking to. I would even, if I was giving this presentation, obviously, if it's to a room of 100, we got to just present. But if I'm giving this to one person, I'm going to get their feedback from slide to slide, just like Dave's doing with me. I'm not just, shoving my belief of the market down their throat. I'm walking them through some data. I'm sharing them, some things to consider. And then, of course, it's okay to say, and my opinion is this. What is your opinion? Anyways, love what you're doing. If you got questions, put them down below, guys.
Yeah. Let me say the thing about that, Dave, because I love your heart in being sort of the teacher. That's the mindset I would adopt. Don't be afraid of somebody that says, I think something different. One of the best questions you can always ask is something in the vein of, you seem passionate about that. Tell me why you believe that. I don't think this is going to happen, Dave. Tell me why you believe that. And that allows me to have a dialogue. I've got the information on my end, but I want to listen to what they believe. And that may be rooted in, an experience they've had. They may have some information that I need to know about, but I would always ask that. Why do you believe that? Very disarming way to have that conversation. And I think there's a lot of people in our business that have differing opinions, obviously, about that, but I'm bringing you these facts. So let's sort of turn our attention to the rest of the year. Somebody says, what do you think is going to happen for the rest of the year? I'll give you a couple of perspectives on that, and maybe some even mindset sort of thoughts about that. First one comes from NAR. While higher short-term interest rates will push up mortgage rates, I expect some of this impact will be mitigated eventually through lower inflation. So we have things that are at play right now that are pushing rates up, and what they're speaking to is those things will be solved. And I do believe that. I'll tell you that. Let's talk about inflation. There are a lot of opinions about that. I think we will get inflation under control, not tomorrow, but at some point. What do you believe about that? Is that 3 months? Is that 6 months? Is that 9 months? Is that some point out in the future? But some of these issues are going to be solved. Goes on to say, thus, I expect the 30-year fixed mortgage rate to continue to rise, although we aren't likely to see the big jumps that occurred in the past few weeks. Again, another nod to rising interest rates. Things that are driving interest rates will be solved, not at the pace we saw in this first several months this year. Okay, I'm starting to educate. I'm starting to get this relevant market opinion in the minds of my financial planners, my agents, referral partners, folks that I'm working with, whatever the case may be. Second piece, what do we expect home prices to do this year? Well, what are experts saying? Experts are saying on average about 8.5%. You know, at KCM, we've said this year probably between 8 and 10%, but I will tell you, forecasters as the year has gone along, they've had what they would commonly refer to a bias to the upside, meaning they keep raising the level of their forecast. We started out forecasting prices at the beginning of the year about 5%, and here we are in April, and we're up to 8.5%. If I had to bet on it right now, I'd say between 8 and 10% appreciation in residential real estate today. Why is that? Rising interest rates, rising prices, and this is the word I would use if I were you, will moderate the market. It's not going to turn off the market. We're not going to see gas on the fire of the market, but it will moderate the market because it's becoming more expensive for people to buy homes. And what happens when things become more expensive is that people say, well, I was a buyer then, maybe I'm not a buyer now, or maybe I'm changing my direction, whatever the case may be. But I think this gives us, some perspective to be able to guide clients through this environment. One thing I will note here, Dave, is the NAR here. They're forecast in orange. The only reason I have it in orange is they haven't updated it yet. I do expect them to update that, but that's the latest information we have on prices. A couple slides I'll give you just to wrap things up. I think these are important slides that you can, obviously on any of these, make the choice how you use them or if you use them, but current rate right now as compared to historical interest rates. Everybody's kind of talking about where rates are at. We're over 5%. It wasn't too long ago that if we were at 5%, we'd all be jumping for joy. Let's keep that in mind. And I understand the reality of the refinance business. I understand the reality of a rising rate environment, but let's also make sure that we bring perspective to the clients we serve to say, historically, we're in a phenomenal rate environment. This quote from Freddie Mac with rates rising, expected to rise throughout 2023. It makes sense to obtain a purchase or refinance mortgage. They go on to say, if you're in good standing and you can qualify for it. And that's the truth about our business. It still makes a lot of sense. We're in a great interest rate environment, although we certainly have seen historic and phenomenal interest rate environments over the last couple of years. One more slide. I'm going to end with this. My perspective on what you need to be doing right now. First, make your message simple and effective. I'm in the mortgage coach community in Facebook. I see a lot of things posted, and I see a lot of things posted where I go, I don't understand what that is. Be simple and effective. People will understand it, and they will start to follow your leadership. Remain hyper current on everything housing right now. If you want to be the knowledge broker to the clients you serve, have the information they need. Number 3, mix all this national data with your local information. I'm bringing you everything happening at the US level, but Dave, if you're in Portland, if you're in Denver, if you're in another city, you're in San Diego, wherever the case may be, bring your local information with that. And I'll end on this, Dave. Always remember this. In times of uncertainty, people will follow the certain. If you're certain about what's going on, people are going to follow you. And I am absolutely certain that you can give the best advice using this information for what agents are asking right now. They're asking these questions. They're asking, how is this rising interest rate environment going to affect my business? And you can bring them the answer.
So, David, this was amazing. My number 5 on here, guys, would be people, they believe what's visual, what they can
Yeah.
see, and numbers and math don't lie. So to be able to use some slides to show some market data, help them make some opinions, and then use a total cost analysis to help them personalize it and localize it based off their assumptions and how they're interpreting the data. And guys, if it's a first-time home buyer and their interpretation of the data and the assumptions they're making is keep renting and don't buy, guys, that's a value. That's a service. You help that consumer. You also help that realtor. And it's okay. Some people, the data and how they interpret it is going to drive off the fence and into escrow. Or, hey, I know there's a bidding war, but I'm going to make a winning offer instead of just going through the motions. Guys, like, go through these assumptions. And then number 5, localize it and personalize it with the total cost analysis. So David, you and the Keeping Current Matter team, you're just a blessing and a gift to the mortgage coach community. I really appreciate these slides. You guys do a lot of free content. You're on this call, you're giving me, these slides. You've got a blog, Keeping Current Matters blog, I think is the number 1 blog in the real estate space. But if someone wanted to, they're a mortgage professional, they wanted to get your premium service, could you just really quick, where do they go to sign up for your, your monthly fee, and what is the cost, if you don't mind, real quick?
Yeah. Well, let me say something about that, Dave. The reason I love Mortgage Coach, you and I have known each other for 20 years. We both believe the educated loan officer, the educated agent wins in today's market, right? They were able to offer the best service. I always tell people there's a wall here that says we believe every family should feel confident when buying and selling a home, and that's what drives us. And that's why this is so easy. But I will tell you, and we talked about it before, we do have a product for loan officers if they want to use it called Bridge Builders. Think about building the bridge between the agent community and the loan officer community, and that great partnership. You can email me at david@keepingcurrentmatters.com and check that out. You can go see everything at KCM, keepingcurrentmatters.com, and check all that out. For Bridge Builders, it's $99 a month or $999 a year. And listen, we want to give you the information so that you are the expert in the market, and grateful for the opportunity just to spend a few minutes together, Dave.
Yeah, and what we got just now is just like, I don't know if there was 6 or 8 slides. Typically, as a paid customer, which I am, I'm getting, I think it seems like always over 40 slides. I'm getting a narrative. So I'm getting a walkthrough of what these slides mean. So you're getting a lot of insights. And then here's the deal, guys. Not only are they developed in a way that you can integrate them into your own presentations, but you're smarter. You're an expert. Like, the days of being a fulfillment LO, where I know how to convert a lead, I know how to close a loan on time, I know how to solve problems. That's not enough, guys. If you're gonna make this decade better than the last decade in the mortgage space, you need to be smarter. You need to do it because you understand the market, you know the market, and you're able to, in a compelling and simple way, have that conversation with buyers, with realtors, with CPAs, with financial planners, with everyone. So, I think if I could make it a requirement of Mortgage Coach members, I would say, guys, get in this other community, become a customer, email David. If you got value from today's conversation, give it a like. Remember the slides that Dave covered, they're in our Facebook group, Mortgage Coach Productivity Mastermind. David, any closing thoughts as we wrap up today's conversation?
I'm going to close with what I said. With two things that I said. I've got to give Jim all the credit in the world for developing your relevant market opinion based upon fact. I think, Dave, that is more critical than ever before. Okay. Second thing is, always remember, and I'll say this so many more times, in times of uncertainty, people follow the certain. And I'll tell you right now, there's a lot of uncertainty in our business. There are a lot of people asking questions. Part of being the educator and being the expert, Dave, is being certain and saying, hey, this is the way that we need to go.
So David, this is an awesome conversation, huge value. In this uncertain market, I want to bring as much value to our community as possible. And if we were going to do another call later this month or next month, what do you think the next topic should be? What's another
Yeah,
big one?
yeah, I'm happy to do that. Love doing things together. Biggest question out there in media, buyers certainly asking it, many people, is will we see home values fall in the next 6 to 12 months? Will we see a crash? And this isn't like, is this 2008 all over again? This is a different question. A lot of people saying, gosh, it feels a little hot right now. And let's do a call on that, Dave. Let's talk about that so that we can break that down and give you the visuals and the facts again to develop your own market opinion on that.
So guys, we will decide how soon we do that, what priority we put around that based on your feedback. Do you want us to do that? Or do you have other questions that you want me to cover when I talk to David?
Yeah, absolutely. I'd love to see that.
Put it in comments down below. And this is a wrap. Give it a like, share it with your mortgage friends. And thank you very much, Mr. Childers.
Thank you.
Take care, y'all.